Mm.
It's giving.
Welcome to Vishal and Company, where Equity Guru's own Vishal Tura, Taku Ndachena, Colin Botrell, and Maddie Grace examine the week's financial events in real terms, bringing the esoteric blur of public market activity into sharp focus. So come in, sit down, put your feet up, and enjoy.
All right. Hello, and welcome to this week's edition of Vishal and Company. This week, Vishal is going to give us a quick overview of general market updates and how the upcoming election is affecting the markets. TK is going to go over big bank earnings and what these businesses tell us about the future of our payments. And lastly, there's a phone ringing. And lastly, Colin will be going over what essential services stocks will look like with lockdowns looming and COVID cases rising. It's a real nightmare. We will try and make this insanely stressful day as informative and fun as possible. I'm the resident not finance person to keep all these guys in check. It sounds like they're not speaking English for my non-industry friends tuning in. All right, Vishal, take her away.
All right, so this is the big day that we've all been waiting for. And if you read my article last week about a cuckening that is approaching and a potential bear market or bear trend in stocks, we are still holding those zones, but I'll cover that in just a second because it is a high-risk event. Do be careful with some of your trades. Of course, today's U.S. presidential election, it takes the top of the list of the most high-risk event, but we also do have the Federal Reserve and their interest rate decision, not tomorrow, not on a Wednesday, but actually on a Thursday, because I guess they're going to allow the market to digest the information overnight regarding the election. And then we also have, of course, the U.S. non-farm payroll or employment job numbers, which come out on Friday, and it's typical. It's the first Friday of every month. So a big week of interest rate decisions and employment, and of course the US presidential election. But I think it's safe to say that the market is definitely a bit more worried about the presidential election, which is going to take place today. So we talked about this pattern. Again, I mentioned it here in the article, which I spoke about last week. A topping pattern called the double top pattern, which primarily looks like, a large M, right? That's what the shape looks like here. And we generally see it at the top of a prolonged uptrend. And you can see here, we've had a nice uptrend here before. And the trigger is, of course, the break below what we call a support line or a price floor, which is here at the 3220 zone on the S&P 500. And as you can see, last week for a few days, we did come down to test that zone, but we just never did close below it. And we did say that this is, the make or break zone. This is the line in the sand. And with all these high risk events, with the election, of course, tonight, and the Fed, it's very likely we can break below this support zone, and we will go over that. And basically, I think there's 2 out of 3 election scenarios which could cause the markets to stumble. But when we look at the bond market and the VIX, you'll see something a bit different right now. But I would still caution people who are about to trade or have positions for swing trading, right? So if you're an investor, don't worry about it, in my opinion. Although we can talk about that in just a bit, because maybe some industries like cannabis will do well with one president. But I think as a trader, just expect this volatility. And I just want to quickly show you the charts here, the NASDAQ, and the other equity markets, but you can see it's the same shape, that double topping M-like pattern. For the NASDAQ, we have our support here at 10,900. And then for the Dow, we hit the very bottom limits of that. And we have bounced spectacularly with all the other markets as well. And this is at 26,310. And then, of course, we have also seen a drop back to support and a pop here on the Russell, although the Russell, which is, of course, the small cap index, doesn't necessarily show a similar pattern here like the double top patterns here on the S&P and the NASDAQ and the Dow. So, a very important pattern, and it's happening at a very important week, probably the most important week of 2020. So we're going to watch to see what these do or how these react to the news. But before we talk about maybe what the market's pricing in for the election, I just want to quickly highlight a key point here in the article where I talked about oil and the lockdowns in Europe. So we saw the markets dropping in Europe as Germany and France and I believe Spain and now the UK are undergoing another what they're calling a partial lockdown or a limited lockdown in some countries. And we saw this pattern head and shoulder reversal here. You can see here a left shoulder, the head jutting out, and the right shoulder. So the technicals were indicating that something was about to happen. We just don't know what happened. And then the news came out afterwards. So I like to think that technicals and charts can sort of predict news events because I do believe there is imperfect information and insiders and people who know that information can get into trades earlier, which can sort of predict what's about to come down the pipeline. And there's been many instances in my trading career where I've seen that. So the German DAX, once again, did make that drop lower. But as you can see here, it is recovering. And you can see the UK market here also recovering. The French market here also recovering. And the Spanish markets here also recovering. So is this all about, what's going to happen in the US election? I think it possibly could be. But we'll just get to that in just a second here. And then the 10-year yield here. You guys know, and I've talked about this last week as well, I was expecting money to run into bonds for safety just because you don't know who's going to win the election. You don't know how the markets are going to react to that win. Probably best to put money in bonds, in safety play just for the short term. Wait for the uncertainty. And that's the key word, uncertainty, because that's really what affects the markets. And I think after today, once that uncertainty hopefully dissipates, markets can continue maybe their uptrend depending on the outcome. But what we are seeing is we are seeing no fear, actually. When the bond market or when the yield particularly is moving up, it's indicating that money is leaving the safety of the bond market and is either going to remain in cash. It's either going to go into equities or into commodities. And because we have, a green day in the stock market, it is sort of indicating that the bond market is, already predicting a win or some sort of victory. And you can see here, CNBC has talked about this, that the Treasury market is indicating the election outcome will be known soon. They are saying that it could be a Biden victory since that is what the polls are predicting. But I find this funny because it indicates, okay, regardless of whoever wins now, we have to keep in mind that cheap money is going to be coming regardless. So this is what I've been preaching for quite some time, that there's actually nowhere left to go for real yield in the world except the stock market. So regardless of who wins, cheap money is coming regardless. And that's something, I think the market is getting better to understand. It's really just this uncertainty right now, which is causing all that volatility there. But TK, I got to ask you, man, you're a dollar guy, you're a dollar bull. What do you think about this move here in the dollar so far?
Honestly, I think it's one of those short-term reactions,
right,
to the news that's going around in general uncertainty. So I wouldn't look too deep into it.
Right,
I think the general trend is still okay on a bullish case to put most of your assets in US-denominated securities, I think.
Right. So just the way people are looking at this right now is, if the dollar is moving higher, it would indicate a safe haven, right? So maybe people are sort of worried about what the election result's going to be. But as you can see today, we've actually, and I'll go down to a shorter time frame, we've actually had a bit of a drop today. This is a 5-minute chart. So the dollar has been dropping, which again plays to the whole aspect with the bond market moving higher, indicating that maybe there is no fear and the election outcome is determined. And to that front, I just want to highlight my article today about the election. And there are 3 scenarios. One, I believe, is really positive for the stock market, and that is what apparently CNBC and what the bond market and the stock markets are showing or indicating, and that is that we get a clean cut victory. The win or the margin is strong enough that we know who's won and things can go back to normal. The other two scenarios is, one is the victor cannot be determined for a few days. And there's articles about that. Actually, Nouriel Roubini, who's like a quite popular, economist here, is saying that the market can actually fall by 10% because there's something called mail-in voting, and some of the mail-in ballots might not actually make it in time, and that can be used to say the election result will have to be delayed. If that comes out, I think the markets would maybe start to range. And if that's prolonged for a bit longer, the uncertainty builds up and that would see markets fall. And then, of course, the third and final scenario is the one that we hope to avoid. And that is a contested election where you get the judiciary involved, and we might not have a president for quite some time. And that would, I think, weigh in on America in terms of the US dollar and also its geopolitical position. So that's a scenario we want to avoid. I will be honest, a lot of traders are not really looking at the cheap money play. They are actually thinking markets are going to tank regardless. They do believe if there's a Trump victory, we're going to see civil unrest. Or if we see a Biden victory, we're going to see a second lockdown, which would obviously be bad for the U.S. stock markets. So in that case, people are saying markets are going to go down regardless. And I think, Colin, you wanted to talk a bit about how we can play, even if it's not a second lockdown, but a bear market, I guess.
Yeah, I mean, kind of just looking at what sectors rallied on our last kind of big shutdown. Like, chances are we're not going to get another multi-month lockdown. But if you look at it, we had, the work from home stocks like Zoom did really well. The entertainment things like Netflix, for example, did well, and I think they've been consolidating a bit too. So could be something there. And then, of course, kind of your classic sort of sin stocks. There's obviously big, some big stuff happening around cannabis tied to elections, but they've also kind of got that essential status.
Okay.
In the last lockdown. Same with kind of liquor stores and grocery, like Costco. So just kind of thinking about industries that thrived in our last kind of shutdown, especially if we did get a Biden presidency. It seems like that's something people might be thinking he might do.
Right, yeah. Pricing that in. Yeah, for sure. Maddie, what were you doing in the lockdown? What are some things that you were using? Maybe we can translate it to some stocks here.
Maddie strikes me as a gamer.
A video gamer? Okay. So we can take a look at GameStop, maybe?
Yeah.
That had a nice bull move.
Nice.
Yeah, Amazon. I'm trying to think what else. Banana bread. Made a lot of that. How does this translate?
Long banana bread.
Mm-hmm.
Well,
Netflix, movie watching.
Yeah, Netflix. Yeah, we covered that. I think, Zoom was obviously the biggest winner with the whole lockdown thing. And then, Peloton. That was another one too, right? With home gyms. If gyms are closed. I mean, look at that move, man. That's from $38 up to close to $140.
Wow. That's a good move.
Yep, Peloton was another big move there. So, I think as we mentioned, a lot of high risk events. A lot of eyes are going to be on the election today. And before I end my bit here, I just want to show you guys how the market actually reacted to the election in 2016. And there we go. I have the arrows pointing us to where I want to be. So again, folks, this is the overnight and into the next day U.S. session candle, right? So for us, it will be our overnight candle tonight when the election's taking place, and then the candle which will close after the U.S. trading session, which will obviously close tomorrow at 1 p.m. Pacific Standard Time, 4 p.m. Eastern Time. So as you can see here, when we had news of a Trump victory, and I just want to remind you guys, the polls were telling us, right, that Hillary Clinton was going to win. We also saw the fact that, the polls were telling us that Brexit would not pass, but it did pass. So I would be very careful with the polls. But again, when a Trump victory was pretty much certain, the markets began to sell off. And then, as you can see, we did reverse that when the markets did close. Open the morning after, and we closed at near the highs of that daily session. But I think I want to just also point out to the price action following the election, right? I mean, yes, we did have a slow and steady climb because I guess it did take some time for the market to digest this victory. But I think, we might see something similar to this tonight. Be careful if you are, a trader with positions holding overnight. I'm a bit lucky. I can trade CFDs, I guess, so I can close and open positions as the day goes on. Although I will tell you, for me, I just cannot predict how the markets are going to react. And you just saw that candle, that volatility there is just, crazy. So personally, for me, I'm not even going to be trading these markets here. I am actually just in cash and just watching to see what plays out. And if we do get that break, right, if we do get that close and break below here, which could come again, maybe due to a contested election or maybe due to a delayed, victor, I might take a short here on the markets. And of course, if a Joe Biden presidency occurs, I think maybe the markets will also fall if there is this whole idea of a second lockdown or shutdown, which I guess would have to take place, though, technically next year, since he would be sworn in January.
Yeah.
Right. So that actually adds a bit more drama and twist to the whole thing here. So we'll have to see how that goes.
Yes.
All right, TK, I'm gonna pass it to you.
Awesome. I'm going to take a bit of a break from the general market here.
Sweet.
To look at some of the micro events that are happening, especially going into a second lockdown. I think we all know now Europe is going to go into, most of Europe is going into its second lockdown, meaning a lot of some of the consumer spending, and we're expecting it to reduce again. UK also announced that it's going into lockdown as well. I think for a few months, that's their guidance right now. And it's impacting not only air travel, but a lot of the banks and payment companies. So I want to look at Visa, American Express, and MasterCard and PayPal today. I'll probably try focus mainly on the big players, so Visa and MasterCard. They control most of the market. And then talk about PayPal because that's one of the companies that's looked at as the future of payments. So most people would now ask, why look at these specific companies and what do they actually do? That tells you that where the economy is going. Obviously, the information is a bit delayed, but it does give you more of a guidance on where consumer spending is going. So it's all probably common knowledge that most of the cards issued by Visa and MasterCard are credit cards, debit cards, and prepaid cards. And the biggest consumers or users of those cards are businesses, governments, and consumers, people like me and everybody else on the panel who use the cards. So generally, it does give you a good indication of where transactions are going, if there are any. And the biggest thing coming out of the reports by Visa and Amex and MasterCard were domestic sales in the US were fine, but international transactions were slow, negative, actually, this last quarter. And this just kind of shows you that although the US market is showing a general recovery going into the election today as well, there's still a lot of uncertainty on the global scale. Mm-hmm. We're not too sure when things will actually go back to normal. It's actually a bit morbid, but I think it's always good to look back at history as an indication of where we're going. And I wasn't in the Great Depression, of course. It was 1930, but
I'm sure you would.
but I've read enough of it to kind of appreciate what was going on at the time. And the biggest thing out of the Great Depression was uncertainty. The market lost most of its value. And there was not as much spread of news then as we have today, which is an interesting fact to think about. But the depression lasted close to 5 years for a full recovery. And this was not a geopolitical recession. It was more focused on the financial sector in the US. And right now, what we are experiencing is a pandemic-driven recession. We have no way of telling how long the recovery will be. And the numbers coming in from companies and the government kind of show that we are moving forward. Yeah, GDP went up 30% from its lows of 30%. So we're breaking even. We still don't know how fast that recovery is going to be. And for most investors, this is now the situation where you sit here and you ask yourself, I don't know where we're going to be in the next 2 to 3, 5 years. But if I was being as conservative as I could be, I would look for the safer assets. And that's where, Vishal, you're talking about looking at some of the US denominated currencies. Mm-hmm. It explains some of the bull run in gold. It explains some of the moves in a lot of the commodities. For example, oil as well is up. Not oil, sorry. Coal is up as well. It just kind of shows you the change in people's narrative of where we're going. People are anticipating a drop in most of the tangible assets that they hold. So they're going into something that stores value over time. And I am also on the side of not allowing the market to dictate how you allocate your assets. Mm-hmm. People would call it contrarian investing. Not really.
Yeah.
Just because it's contrarian doesn't mean it's right. It's more of just knowing what you're getting into, mm-hmm. and understanding that if the big guys, Visa, MasterCard, are showing that transactions are not as recovering as quickly as we estimated, maybe the market is forecasting and pricing in a wrong forecast from before. Mm-hmm. And that's something a lot of investors should start picking up on some of their analysis right now, be it if they're making the longer term trades or the shorter term trades. You should factor in how much uncertainty is actually there, even though some of the numbers are coming out pretty well. To give you an update of some of the earnings that did come out, all four, Visa, MasterCard, Amex, and PayPal, did beat their earnings by a large amount. And to put that into perspective, all four of these generate above $4 billion in 3 quarters of revenue. And over a couple of years, that's 23 billion on average for each one. And then, you can do the math there and see they really do show you where transactions are going over time. And as an investor right now, I would sit back and wait for a good entry point to get into these, specifically because we're expecting a decrease in the number of transactions internationally in the next quarter because of the potential lockdowns. But this is not to say speculate on a drop in price. You can never really tell where the price is going to go, but it's more of keep an eye on them, especially you're not going to go wrong holding Visa, MasterCard, or American Express. I mean, I want to ask the round table, how many of you guys have a MasterCard or a Visa or an Amex? I'm a Visa guy myself.
Yep. Visa.
Get the old MasterCard.
MasterCard, Michelle?
I got a Visa as well.
Visa. You take Galen Visa as well, I'm assuming?
Actually, I'm running 2 MasterCards.
My guy.
You're going against the grain, Galen. It's not good.
As always.
But yeah, it's a business that's really easy to understand. Investors can get in and know their money is safe. The big question is obviously, what is the right time to get in? I feel in investing, the question should never be, how cheap is this stock? But what price am I paying for what value or potential value? But at the end of the bull market, a lot of people don't ask that question.
TK, let me be the devil's advocate here, man. Let me ask you something. why would I want to buy American Express, Visa, or MasterCard when clearly Bitcoin is going to be taking over? You know, it's going to...
Awesome. I love that. I love that question. Honestly, Bitcoin is...
Take a look at this, folks.
Let me take a moment with this one. You have to be politically correct.
Well, I mean, technically, you know, it's back up to 14K, which I'm on the weekly chart here. Very, very significant level. And of course, we have been watching the zone over on the Equity Guru Discord channel or trading group channel.
Oh, yeah.
Waiting for either a pullback or, you know, a pattern here, which might indicate a weaker price, or price breaking above 14K. And it's holding the zone very, very, you know, very well. And as you can see here on the weekly chart, a break above 14K could take us back to 17K and then back to close to 20K afterwards.
Oh yeah, it's completely true. Some of the price action might be a great indicator of that.
Right.
But I lean on the side of not buying Bitcoin based off the fact I would be, if I was to buy it, to go into Finance 101, I am making a bet that I will be able to sell this to somebody in the future at a higher price, preferably at a higher price. Mm-hmm. And that is all on the marginal opinion of the market, which is way more difficult to predict than a business that's generating, that's actually regenerating and reinvesting something more tangible, even if it's technology-wise. And I lean more on the side of being a conservative in that way. And to be the devil's advocate on Bitcoin as a currency, which is what it's trying to be and might become, we don't know. It still doesn't have the processing power or to go through a lot of some of the transactions that Visa, MasterCard are able to do in a given day. Mm-hmm. Not to say they will never get the infrastructure to get there. PayPal is making investments in Bitcoin to try to get that infrastructure going. But fun fact, PayPal actually uses some of Visa's processing networks to do their own transactions.
Okay.
So
and PayPal also is allowing transactions in crypto starting next year, I believe.
Next year, yeah. It's trying to incorporate the currency, which is not a bad thing. Right. It's just to be completely aware, if you are to buy Bitcoin outright, you're making a bet that you'd be able to sell it to somebody else at a higher price. Obviously, there's certain indicators that can tell you that's the direction of it, but I lean more on the side of I have no idea what the market is going to do tomorrow, let alone next year once PayPal fully initiates their program. Right. So I'd rather go with Visa that's able to make, in a year, 11 trillion transactions. Mm-hmm, mm-hmm. I'll let that number sit for a bit. 11 trillion transactions, 650,000 transactions per day, per second.
Bitcoin could never keep up with that.
No. Yeah, it'll be very hard to. But eventually,
I don't know what Bitcoin is. To be honest, I wouldn't invest in it.
It's not a bad investment. It's more one of those, you have to know what you're getting into so that you can appreciate some of the volatility that it does have. Mm-hmm. Unlike currencies, if you had invested 100 years ago, your money would basically had not moved. Right. Currencies are basically flat over a long period of time. We will wait for Bitcoin to have more of that data, those data points coming through, and that will probably give it more of that stability as Wall Street and corporate America gets into it. It will give it that institutional buying that will give a stable price. Stable here being a loose term, but a more stable price over the long term, and that's the expectation.
Awesome. All right, and I covered some of what you wanted to cover. Is there anything else you want to add?
I am good. I was just gonna say I think Bitcoin's more of a trading vehicle at this point, so that's my contribution to the crypto conversation.
We'll have to do a whole show on this because I think there's there's people who think Bitcoin is going up because of the fiat currency crisis. So I think we'll do an entire show on that one day because I can talk hours about that.
Awesome. All right, I'm gonna wrap us up. one last thing to set us off. Gut feeling. Who wins today? Colin.
I'm sticking with last week's vote, and I'm going to go with giant meteor.
Fair. Vishal.
I think I'm going to surprise everyone and go with Kanye West.
Oh, that's a terrible vote. Okay. TK?
I feel it's Trump.
Galen?
Civil War.
So Trump.
Oh
Trump.
my gosh, guys. That was the worst 45 seconds of my life. I'm going to say Biden again, because I'm the only optimist in this group, apparently. Gosh, these finance people, man. What happens to them?
If I saw oil break down, I would have said Biden, but because oil is holding up here, I think that's pricing in no lockdown, which would mean a Trump victory.
Hey, Maddie.
Yeah.
Trump cuts taxes, so I'm happy with that.
We're not happy
For a select few, trickle-down economics doesn't work.
That's true.
Okay, you're black. I'm a woman. Nothing good is going to happen here for us.
That's true.
Okay, on that wonderful note.
You kind of have to look at it on both sides.
Yeah, just kill me. We're going to sign off. Hopefully next week I have a huge smile on my face and can make fun of all of them for being so pessimistic. Maybe. All right, we'll see you next week. Thanks for tuning in.
Thanks, everyone.
Thanks, guys. Be safe.
Thank you.